Welcome to the Daily Brief, where I'll go over the action in the market for Wednesday, March 8th, and then we'll see how things look for Thursday, March 9th. We had a pretty sleepy day. After going down in Tuesday's session and really reacting to Fed Chair Powell's comments, the market was more subdued on Wednesday. There really wasn't anything new that was said, so the market didn't really have all that much to key off of. There was some economic reports that I'll go through in just a moment, but overall, we had gone down pretty far pretty fast in Tuesday's session, so it was not necessarily surprising to see Wednesday be sideways to slightly up. So let's go back and talk about what happened. Right at the open, we had another flat open, and prices just went above and below the unchanged level. As the day went on, prices then fell further below the unchanged level, but then we saw some late day buying that came in and pushed prices back above the unchanged level to actually go positive. We were up 0.14% on below average volume, and that continues where there's a real lack of conviction to take the market either higher or lower. Our technicals are still more negative overall. There's a few positive little areas that I can talk about, and I'll show you charts of those, but we're shifting back more negative. Unless we see some real buying coming in to turn things back up, we are deteriorating with our technical picture because of the inflation and interest rate scenario. Here's the intraday chart showing how we had a flat open and we danced above and below the unchanged level. That's the dash line here. Later in the day, we did drop down a little bit, but then we came right back up, came back down. Then going into the close, we were able to get back above the unchanged level. So not an awful lot was really decided in Wednesday's session. What are some comments that we can make? The market was very tame as Fed Chair Powell gave day 2 of his testimony. The 50-period moving average for the S&P, which had been support, well, we fell below that, so it's now acting as resistance, and that's at about 39.97. We still have parts of the PMO study that are extreme negative, and I'll show you that. The dollar was up, and interest rates were also up, so this provided some headwinds for stocks. We still have all of the yield curves that remain inverted. Sentiment is still neutral at 46, where we ticked down a couple of notches from 48. Our trend, we switched over with the red line. It's just barely on top now, so we are negative, but the ADX is below 20 and weakening. It's below its moving average. I've kept our bias at mixed, even though we had switched from negative because we had an up day. The market is really indecisive right now, and it could go in either direction, but we're leaning more towards the negative side, and our momentum is also at mixed. The economic reports that came out, we had the weekly MBA mortgage application index. It came in up 7.4%. Last week it was down 5.7%. The ADP employment change came in a lot stronger than expected, 242,000, where they expected 195,000. Last time it came in at 119,000. This comes out a couple of days before the employment situation report, and this could have freaked out the market, seeing such a strong number, but a lot of times what we get on Friday and what this report says are often quite different from each other. The trade deficit came in at $68.3 billion. They expected it to be down $69 billion. Last time it was up $67.2 billion. And the JOLTS job openings come in at 10.824 million. Last time it was actually higher than this at 11.234 million. Just to keep an eye on what's happening as far as the probable rate hikes coming up at the March 22nd meeting, this is where we were last Friday on March 3rd, where 71% said we were going to go 25 basis points. Then after Chair Powell gave his talk on the 7th, this immediately shifted, and now we have 72% saying we're going to get a 50 basis point hike. And then this is where we stand after Wednesday's close. It's ticking up just a little bit more at 76.4%, predicting that we will have a 50 basis point hike. The Ulster Index has dropped quite a bit as we're chopping around and not really going anywhere, so we're getting more of a neutral reading on the daily chart. We also have the latest reading for the Investors Intelligence. This measures bullish or bearish bias, where they had been extreme negative for a lot of 2022. Well, we're coming back up, and as of February 28th, we're negative because we're below this dashed line, but it is coming down. Please be warned that this data is a little bit old. Looking at the VIX, we ticked down a little bit on the line chart because we had a slight up day, And on the bar chart, we still continue to be below 20. The VIX of the VIX is also showing a slowdown in volatility with the bar chart and with the line chart. The force index continues to be negative. It ticked up slightly, but it's still below 0. That's a short-term indicator. Here's our ADX showing how the red line is just barely above the green line now. So selling pressure is on top, buying power is on the bottom. We have the ADX continuing to decline below its moving average and below 20. On the daily chart, the blue line is a 50-period moving average where we came right up to that level and bounced back down, so it's now acting as resistance. On the bottom, we see where volume was well below average. The stochastics in the short term continue to be negative, even though it ticked up slightly. We're still negative in the intermediate term, and we're trying to cross over, but now starting to go back down with our long short-term indicator. Here's the 50-period moving average where we came right up to the red line. That was the high that we set, and we're bouncing back down. Here's the 100-period moving average, which so far we've been able to close above that, so it could be providing support. And here's a look at our moving average tree with kind of the mess going all throughout the tree. Looking at our oscillators, the slope, which is our most touchy oscillator, it's starting to turn back up. Our other short-term indicator, the TSI, is showing some improvement, but it hasn't crossed over. Where the MACD is still negative, the PMO and the PPO continue to be negative, and our long-term oscillators are still headed lower. Parabolic SAR, we're keeping an eye on this. If we go down or up, we're looking for some kind of a change. So far, it has not changed, so this is still positive. The Chaikin oscillator is below 0, even though it ticked up a little bit, that's still negative overall. Here's our PMO study. We're no longer extreme with the PMOs that are rising, but we're still extreme with the buy signals, and we're headed lower with the percent of PMOs that are above 0. The Swindlen trading oscillator based on price is positive and turning up slightly, but we declined and we're just about neutral based on volume. Not really seeing a big change in the BPI. We're hanging out a little bit above, a little bit below 50 right now. Currently, we're just a tad under 50. And here's our longer term look. We're a tick down with the NYSE bullish percent index, so that's turning more negative. Chaikin money flow continues to be negative, and we're below this red moving average. The balance of power continues to be negative. We're seeing a little bit of improvement with the TTM squeeze, a lighter shade of red, but it's still negative overall. We have some no-go signals that are repeatedly being generated on the go-no-go system. Short-term fib levels, nothing really decided. We have some overhead resistance. If we break above the 50-period moving average, then we have the 4007 level to contend with, and our next level down below is at 3908. A little longer term, again, we might have some overhead resistance at the 4000 level, and that's really the only resistance that we see right now, and there's no support on this chart. Longer term, we might have some support down at the 3826 level, but that's quite a bit of ways from where we're at right now and would take a pretty significant decline. If we continue to go back up, if we break through those other levels, then we're looking at the 4020 level. Ichimoku Cloud, just watching this to see if this is providing some kind of support. So far, that has been holding. The Elder Impulse system for the S&P has now switched back to neutral. The McClellan oscillator continues to be negative because it's below 0, even though it ticked up slightly. And here's our broader measure of the McClellan oscillator, also continuing to be negative. The summation index based on price is now dropping below 0. We've already dropped below 0 based on volume, and both are declining, so that's negative. New highs, new lows saw a little bit of an increase in new lows, and we are declining with our 5-period, and we're flat to slightly declining with our 10-period. We're still hanging in there as far as the advanced decline line. Based on price and volume, we're above the moving average. The advanced decline ratio is turning back more negative with both the blue line, even though it ticked up slightly, and the red line. Both of them are below 0. Accumulation distribution turned up slightly, and we're just about on top of the moving average, so that's more neutral. Volume is continuing to drop off, and the Dow was down slightly on the day and is in between no man's land here. We have the 50-period moving average above current price, and the 200-day moving average below. The diamonds continue to be negative. The NASDAQ getting close to a golden cross here, but not quite yet. We're still maintaining price above the 50 and 200-day moving averages, but we're still below this pivot point. And the same thing is true with the NASDAQ 100. The Qs have switched back to positive. They were up 0.5%. The small caps are also dealing with overhead resistance of the 50-day moving average. We have some support level down here at the 1217 level. The small caps continue to be negative with red bars. The small cap ratio continues to show weakness, but is still in an uptrend overall. The mid caps also dealing with its 50-period moving average. So far that has been holding up for the mid caps. We'll be watching that level. And the mid caps continue to be negative with the Elder Impulse system. Support is holding up above the 50-period moving average for the small caps, but we broke this other level of support yesterday. We'll have to see if this can gain back some strength. The RSI on top is flat, but still below 50, so that's negative. And we still have a declining MACD on the bottom. We're keeping an eye on this. This is a little bit of a concern. Even though the S&P has been going down and chopping sideways, the home builders were up slightly. The ratio ticked up a little bit, but we're looking at this correlation, the relationship between the two, and that's continuing to fall. So we're waiting to see what will happen here. If this keeps falling, will that be a positive divergence or a negative divergence for the S&P 500? So far, it looks like it could be a negative divergence. Longer bond yields, such as the 10-year, ticked up just slightly. And here's the bond price where it was down slightly. We have a negative RSI on top and a MACD that's still negative on the bottom, but this could be getting ready to cross over. The US dollar was up slightly in Wednesday's session and has been rebounding since hitting this 101 level. Keeping an eye on our longer term trend, this is a weekly chart of the S&P 500. We're above zero with the MACD, and we're still positive. We're above this moving average, but we're going to be keeping an eye on this. If this crosses over to negative, that could signal that this breakout above this downward sloping trend line may have been a fake out. If we can maintain a positive momentum down on the bottom, that will really help to give support for prices to keep going back up. An update with our possible positive scenarios, the 2-year just keeps going up. It's well over 5% now, so we're waiting to see when this spike will be finished. And our staples still hanging in there okay. We're working off of this spike, and then it's coming back down, but we're just not seeing an awful lot of price movement in the S&P 500. So our outlook for Thursday is the employment situation report will be released on Friday, and the market's really going to be looking forward to that. The technicals are still negative overall. As far as the economic reports coming out on Thursday, we just have the weekly jobless claims. And then the whole list of geopolitical events. Of course, the markets continue to be fixated on the inflation and interest rate scenario. The major Fed speak came on Tuesday and Wednesday of this week, where we still have another speech that'll be coming out at 10 a.m. on Thursday, where Vice Chair Barr will be talking about crypto. Then looking at the Stock Traders Almanac for the 9th of March, we tend to be more positive with the Dow and the S&P up 61.9% of the time, where the NASDAQ is neutral to positive, being up 52.4% of the time, and all the other things that I go over kind of on an intermittent term basis. We're on trading day number 7 right now. Now, historically, we would have a pretty strong update, but we're not in this historical pattern. We're in the pre-election pattern, and that's the dashed green line, which shows us pretty much going sideways historically for this day. Then, just to review this, the month of March tends to be pretty favorable for the markets, especially in a pre-election year after we've had a midterm bear market. And then we're still in that supposed sweet spot for the S&P 500. Looking at our scenarios, can't really go with the down one right now. We're not trending overall, even though our technicals are negative. Definitely can't go with the up one because we are negative overall. Even though there are some positive signs, we need to see follow through with price, and we're just not seeing that yet. So we continue to go with the sideways scenario where the ADX is getting weaker. It's below 20 and it's switched over now to negative. Our conclusion, the S&P is negative, short term, intermediate term negative. We're still positive in the long term as long as we remain above the 200-day simple moving average. Thank you. I hope you found this helpful. I hope you have a great day, and I will talk to you in the next video.